Artificial intelligence, or AI, is the hot topic of conversation these days. It's everywhere you look: news articles, social media, even at the coffee shop where you get your morning fix. But amidst all the buzz, there's a pressing question that's been weighing on the minds of many. Will accounting jobs be automated by AI? It's a question that's not just academic. It hits home for countless professionals who've dedicated years to their craft. So, let's dive into this topic, starting with the facts. Recent research from the University of Pennsylvania suggests that a staggering 80% of jobs in the U.S. will be impacted by AI. Among those most likely to feel the heat are engineers, writers, analysts, and yes, accountants. For those earning up to $80,000 a year in tech and finance, the risk is even higher. As companies increasingly pivot toward AI, layoffs are becoming alarmingly common, prompting many to wonder if their positions are at risk. But before we jump to conclusions, let's break down what AI can do and what it can't do when it comes to accounting. At its core, AI excels at automating repetitive and mundane tasks. Think about it: data entry, invoice processing, bank reconciliations, tax calculations. These are all tasks that can be easily handled by machines, freeing up accountants to focus on higher-value activities. Imagine being able to spend less time on the nitty-gritty and more time on strategic thinking, analysis, and providing personalized financial advice to clients. Sounds great, right? And it doesn't stop there. AI can analyze vast amounts of data at lightning speed, uncovering insights and identifying trends that might take a human hours or even days to discover. It can improve accuracy and help detect fraud by identifying anomalies in financial data, something that's crucial in maintaining the integrity of financial reporting. Real-time financial reporting? AI can make that a reality, allowing accountants to monitor a business's financial health in real time and make proactive recommendations. But here's the kicker. While AI can handle the grunt work, there are many aspects of accounting that simply can't be automated. Complex decision-making, for example, is a realm where human judgment reigns supreme. Accountants often need to make decisions based on incomplete or uncertain information, such as choosing the right accounting policies or estimating asset valuations. These tasks demand deep knowledge and critical thinking, qualities that AI struggles to replicate. Then there's regulatory interpretation and compliance. The accounting landscape is riddled with complex and ever-changing regulations. While AI can assist in tracking these changes, it's the human accountants who must interpret and apply these regulations, navigating the nuances that a machine might overlook. Ethical considerations also come into play. Accountants are bound by ethical standards and confidentiality requirements that machines simply can't adhere to in the same way. Let's not forget about communication and relationship management. Accountants often need to convey complex financial information to clients and stakeholders in a way that's clear and understandable. Building trust and maintaining relationships require empathy, active listening, and interpersonal skills, traits that AI is still far from mastering. And when it comes to strategic advisory roles, accountants play a crucial part in identifying growth opportunities and managing risks. These tasks require an understanding of a client's unique business context, something that AI can't fully grasp. So, if AI is so capable, why won't organizations simply automate accountants out of their jobs? Well, let's take a look at the reality on the ground. You see, in many corporations, having a good idea is just the tip of the iceberg. There's often a massive disconnect between what seems obvious in theory and what actually happens in practice. For instance, accountants have built a fortress of job security around themselves, fortified by tools like Microsoft Excel, not to mention the myriad of opaque processes and systems that don't communicate with one another. Instead of automating tasks, many firms have simply added more headcount to ensure that manual tasks are performed. Moreover, let's be real. Many decision-makers in corporations struggle with the basics of technology. I mean, how many times have you seen someone fumble with connecting to the office Wi-Fi? Despite the mountains of research showcasing the productivity benefits of remote work, many employers are backtracking, insisting on a return to the office to reclaim control. And then there are the existing projects and initiatives that complicate matters. I remember trying to implement automated reporting at a previous job. It was going smoothly until the VP of operations, who was set in his ways, insisted I stick to copying, pasting, and formatting summaries in Excel because he wanted things to look just like they always had. This is the kind of resistance to change that can stifle innovation and automation efforts. So, let's talk about why accountants shouldn't be overly worried about losing their jobs to AI. First, there's the resistance to change. Many employees, management, and stakeholders within the accounting profession are hesitant to embrace new technology for fear of job loss or losing control over processes. Then, we have the regulatory and political constraints that slow the adoption of automation. Lawmakers and regulators are cautious about the ethical implications and potential impacts on employment, which can create hurdles for widespread AI adoption. Poor job and system design also play a role. Many accounting tasks are interrelated and require human judgment, making them challenging to automate in isolation. And let's not overlook the high implementation costs associated with AI. Smaller firms, in particular, may be reluctant to invest in automation without a clear return on investment. There's also the fear of unintended consequences. What happens if technology replaces seasoned accountants? Organizations may worry about errors, algorithmic bias, or the loss of institutional knowledge. Finally, cultural and social factors come into play. Many organizations and clients still value the trustworthiness and personal touch that human accountants provide over automated systems. As much as technology advances, there's something to be said for the human connection in professional services. So, where does that leave us? In summary, while AI and automation are set to transform the accounting profession, the pace of that transformation will be influenced by a myriad of factors: politics, job design, fear of change, and the inherent complexities of the profession itself. AI will undoubtedly assist in various aspects of accounting, which is a positive development, but it's important to recognize that very few accounting jobs are purely ripe for automation. Human accountants will continue to play a vital role, with technology serving to complement and enhance their work, rather than replace it outright. For those in the field, the key takeaway is clear: adapt and evolve. Accountants who are willing to embrace new technologies, develop skills in data analytics, and focus on strategic advisory roles will be well positioned to thrive in this changing landscape. Organizations that want to harness the power of AI need to confront old issues head-on and invest the time and energy required to push through meaningful change. In the years to come, it's likely that we'll see a divide between organizations that successfully navigate this transformation and those that resist it. The future of accounting may be different, but it doesn't have to be bleak. Instead, it can be a landscape where human accountants and AI work hand in hand, each playing to their strengths to create a more efficient and insightful profession. So, should accountants worry about losing their jobs to AI? Perhaps not, but they should certainly be prepared to adapt to a new way of working.